Good morning, everyone. Paul here with GammaEdge. Today is Friday, the 29th of July, end of the month. Let's get started. Pause your players, please. Read this. If you agree, hit the play button. Cumulative tick, primary market model. Start here. We are in an uptrend. We're in an uptrend on a long-term basis. We're in an uptrend on a short-term basis. In fact, we might be in a lockout uptrend. Let me explain. 2 days ago, we did pull back. We had a reversal back upward. We had an initial entry here. We had a confirmation here. And that would have been another yet opportunity to get long in an overall long-term bull. Now, yesterday morning, we did have a little bit of weakness in the morning. As soon as the cumulative tick retook the intra-high above the short-term ribbons or the short-term moving averages that you see here, you could enter here right when we clear that. And that, of course, in hindsight shows that we are, that would have worked for you. When you are in a lockout lockout bull move upward or even downward, it's very hard to re-enter. So for those of you who have the TradeStation tool or the TOS tool and perhaps even the TradingView tool that we have in the Discord, I would urge everyone to look at the pullbacks. As long as the pullbacks look strong and do reverse kind of at what you're seeing here, you can re-enter. We did test this extensively over the last 10 years, and it tests very, very well for re-entry signals. Cumulative tick ribbon here, short-term moving average above the longer-term moving average. This is a bullish signal. It's long-term bullish, and we are go for throttle up, continued go for throttle up. The things that would turn this off to watch for is this white instantaneous CT trending down, cutting the short-term moving averages like you see here. That would be a signal to take profits. And then if it continues down and cuts through the ribbon, that would turn off the long-term signals. We're nowhere near that right now, but watch for it. Looking at the SPX condition on a day-over-day basis, solidly improving. Here we have the combo, which is comprised of the AM and the PM. The PM is heavily traded. We're seeing a lot of 0 DTE action. You can see that the short-term negative gamma is being suppressed, puts are being closed, calls are being added, and that's given rise to the short-term positive gamma. When we see that on a day-over-day basis and the spread between the wings increasing, that is an expansive type of market. Now the A, the SPXA, which is the AM settled, these are the monthlies. This is institutional money. It's slower money. It is slower to perform, but it gives a very, very good indication of how the super tanker is turning around. And you can see the improvement on a day-over-day. This is 2 days ago. This is closed yesterday. And the bottom line here is that we are seeing improvement in net positive gamma and a decrease in net negative gamma. Together, these two give us the indication that we're seeing over here in the combo, which is the meshing of the two complex structures. Levels for today, we closed at 40.72. We've got a 2.75 expected move. That's a conservative value. The key takeaway here is that we do have in the PM settled complex, we do have 4100 as a short-term upside, 4090 is another one here. We take a look at the combo complex, which is the AM plus the PM. We have another major level at the 4150. You can see that here also 4150, and plus GEX has resumed and moved up to 4200. You can see the 4200 here, so there's good coincidence between all of these. To the downside, the JPM short strike, short calls that are out in September are still very present and growing. That could form a basis underneath us. It certainly becomes a line in the sand because you can see there's not much below that in the PM. Same thing, not much below it in the AM plus PM. 38 would be the downside, and you can see that 3600 still remains as the long-term downward target that we're seeing here. 0 DTE action, very, very tight. This is positive gamma expiry for today, negative gamma expiry for today. The dominant levels 1 and 2. Good clear transition at 4080, 4085. Wouldn't be surprised if we parked somewhere in this area. There's that 4090 that I showed on the previous slide. 4100 is the key level. Above this, moneyness flips, and it'll be interesting to see what happens. Fairly strong expiry today. Worth noting here, we have both 15,000 calls expiring and 15,000 puts expiring today at the 4,000 strike. Why that's important is that the 4,000 strike is dominant, and you'll see that here shortly. This is the combo. This is the combination of the AM and the PM complexes. Here's that 4,000, and you can see the COI for the complex. Call open interest is dominant down here at 4,000. We also have put open interest dominant here at 4,000. This has been a long-term structure. We've had a significant growth in the net notional on the deltas here. We've continued to go up on this. It's gone another 25 billion to the plus side yesterday, which is, you know, high, but it is what it is. Key takeaway: 4,005, 4,000 area, double negative gamma here, fairly strong. Should form support if we do fall down through transition. We close right at the top of transition. We see transition is moving up. That's a good thing, but we don't seem to be able to get up into the positive gamma area. The entire complex is moving up. That's the expansion we've been seeing the last couple days, but we're riding right at that transition as we move up. It's kind of like riding a wave on the way up here, so something to be aware of. To the upside, I called out 4,200. That is the dominant upside target. 4150 you can see is second in command there, and then underneath it in terms of strike levels, but you can see here 13,000 to 16,000, 11,000. The 4100 is another magnet to the upside. So just be aware of these structures, downside this area, upside those areas, and we'll want to pay attention. This is a good view, I think, of what's going on. We are starting to see a little more balance here. We're starting to see this growth of the 3,900 area that's coming up. Note that the 4,000, 4,005 strikes have 4,005 has been negative, but the 4,000 strike has flipped negative, and that's because of the puts that are going in there. We had a significant amount of puts go in yesterday in the 0 DTE, so just be aware of that. This is becoming a dominant flip area to the downside. Transition is ugly. It's very, you know, cone-like, broken tooth-like. Not well defined. We close right here at the upper trends, literally at 4072. This is the 4070 line right here, and you can see we're right at the base of transition. The entire structure is moving up, but we don't seem to be able to get up into this positive gamma area. We're sitting right at transition. I don't care what other people say, so we're still fragile. Obviously in a bull, it's great. You know, ride the wave, but the structure is not like it was last summer. Just be aware of that. So where are we? Short-term trend is up, right? We might even be in a lockout. Be aware of that. We are somewhat extended. Watch for a short-term pullback and reentry conditions. If you're not sure how to do that, please join us in the Discord, and we're happy to walk through some of the logic behind that. 4,000 is our downside transition. Dominant COI, POI, and the psychological Livermore level at 4,000 really does become the dominant line in the sand. Be aware of that. Our next upside target, you saw this in the PM settled, is 4,100. There is a level there at 4,150, and then of course 4,200 is the plus GEX level for the SPX complex, combo complex as a whole. The daily change in the wing charts clearly shows that the PM settled is dominant. We're seeing a complete collapse of demand for puts and downside protection in the PM settled. The AM settled is turning. The super tanker is coming around, but it is very slow. We do have an upward bias. There's no question. We're measuring it on multiple time frames, multiple instruments. We've got plus GEX advancing, we've got the zeros coming up, we've got the transition zone moving up. We do not seem to be able to break out of that plus transition area. That's not terrible, but it's not ideal. So just be aware. We could slip down into more chop, especially after we get done with the end of month settlements here. So just be aware that there's a little bit more risk today. So that's it. Come follow us at GammaEdge.us. When you get there, click on the pricing tab. That'll take you to a sign-up page. It'll get you into the Discord. 14-day free trial. All the tools turn on. Come and join us. A lot of fun. We have an open mic coming up this Sunday night. Should be fun. Every Wednesday and Sunday we do that. Follow us on Twitter, GammaEdges with an S, and then here on YouTube, of course. If you like today's content, let me know. Smash that like button. A little bit of a competition here. And, of course, subscribe so you get notified next time that we post something. So with that, I bid you farewell. Hope to see you in the Discord. Make it a great weekend, and good luck trading. Take care.